Hello, my awesome people of YouTube. You are welcome to Edge on the Charts. And in today's video, I'll be showing you how to use Trendline and Candlestick Psychology to identify valid market structure. I will also be showing you how to buy and sell XAUUSD using this strategy to make something from the market next week if you are trying it out. So if this is your first time visiting my YouTube channel, you are welcome to Edge on the Chart. In this channel, I show you mind-blowing strategies on how you can use to navigate the Forex market, especially the XAUUSD market. And they are very basic, simple strategies that you can implement. They are the foundation of every trading education, but a lot of people don't pay attention to these basic things. They always focus on these tougher strategies. They focus on complicated setups like MSC and the rest that they want to learn, and still yet they have been unable to make something from the market using those setups. Now those setups are good. I'm not saying that they are not good, but if you don't master the basics, you cannot use those setup to make something from the Forex market. And that's why I like sticking to these basic things, and I'm going to be demonstrating it to you in this video. So please subscribe to this YouTube channel, turn on the bell notification so that whenever I post any videos you can be updated, and you also help us grow by subscribing to our channel and liking this video. So without wasting much time, let's dive into the video. Alright guys, so as you can see, this is the price action movement from on Monday till on Friday, and a lot of people have made profit from the market, while some persons has also lose money, their money from the market. So but before I go into this setup and the strategy in details, I would like to refresh our memory on what market structure is. Market structure is simply the movement of the price creating an higher high, higher low, higher high, higher low. Sorry for my drawing, or a lower. Okay, or the market creating lower high, lower low, lower high, lower high, lower low. So that is just the market structure. That's what we call market structure, and I know a lot of you know about market structure. A lot of you know market structure, higher high, higher low. Then the next thing we are going to be using in this setup is called the candlestick psychology. The candlestick psychology. The candlestick psychology simply means the candles telling us if buyers are stronger or if sellers are stronger in the market. And the way for us to know that is if a candle closes in full body, the body of the candle is more than the wick of the candle, it means that candle is a strong candle. And when a weak candle trend like a consistent weak candle trend up to like 5, it means that is a trend. So if we have two strong candle closing together, automatically that is a market trend. And if we have 5 weak candle closing in the same position together, it means that is also a trend candle. So that is the psychology of this candlestick that will enable us to identify a valid market structure, and I will be demonstrating it for you in this video today. So without wasting much time, let's just start. And if you look from a Monday over here, you can see that it was the trend that Okay, let me take this out. If you look on Monday over here, there is a bullish trend that started from the previous week, Thursday. The market was just bullish throughout, and this is what happened. The market came bullish. You see, this is from a Thursday last week. We have series of weak candles, 1 2 3 4 5, which make this a bullish trend, and the trend continued because there were no bearish candle that took place. The trend just continue. All these are just distraction in the market, so the trend continue, and that is how it continue. If you know how to read these candles, that is how it continued till this position. Sorry, I think we messed up that place. It continued over here, and that is how we have a bearish trend over here. There's a bearish trend that continued over here, and we have a bullish trend that continued over here. So on Monday we have a bullish trend. On Monday is a bullish trend on Monday, and because we have a bullish trend on Monday, the market resumed on Monday. This is how the market resumed on Monday, a bullish trend. So on Monday, what we did was we identified the structure. We have a bearish structure, bearish trend over here. These are series of red candles. That is why it is called a trend. We have a bearish trend over here, and it got to this position. Then after that, we have a bullish trend, series of green candles that just followed each other, and we have a bullish trend over here. And this is exactly 8 o'clock in the morning when I normally check my trade. So 8 o'clock in the morning, when we saw this, the first thing I did was to mark this higher high structure over here. Then I also mark the lower low structure over here. Now guess what happened? I expected that the market should break past this position and reverse back for us to enter a buy, but instead the market did not break past this position. It got to this position, and guess what happened? The market shifted to a bearish structure. Remember the overall time frame. The overall time frame of the market. The market is in a bearish trend. If you check the higher time frame, you will know that the market is in a bearish trend throughout the week. So this was what we got. So the structure over here, the moment it shifted, all we did was just to wait for it at this position, and the market really came back to our entry, and boom, that was how we made profit on Monday. So the market continued to this point here and continued bearish into on Tuesday. So on Tuesday, the market continued bearish till this point right here. And when it got there, the market created another bullish structure, mini bullish structure here to this point, and it continued bearish again. The moment the market continued bearish and broke past this lower low structure right here, let me identify that for you. The lower low structure over here, all we have to do is to wait for a sell. We waited again at this position, and that was how we entered a sell right there, and we made profit from the market. Just 100 pips is enough. 100 pips is enough, and that was how we make profit from the market. When the market got there, the market continued bearish over here to this position. Now when the market got to that position, then the market created a mini bullish structure over here again, and that is how the bullish structure continued to this position over here. Now this is about 3 o'clock early in the morning. Traders are still asleep because it's an Asian session and created a mini lower low over here. Now it's expected that the market should have broke past this position over here and created higher high, but it created a mini lower low over here, and guess what happened? The market continued again bullish, which means the market broke past this structure, creating what? Creating a lower, creating a lower low over here. I'm sorry, creating a higher high, mini higher high over here, and this was exactly 8 o'clock in the morning when I saw this. And the moment I saw this, I knew that I had to enter a sell position, because why I say I had to enter a sell position, I was waiting for the market to price to also finally break past this position over here. Remember, we have this other position over here. I was waiting, assuming the market broke past this one over here, we should have been looking for a buy at market broke past this level over here. We should have been looking for a buy, but instead, as at 8 o'clock, I saw the market here. It has broke past this one, and a lot of people should have entered a buy at this point, but because it could not break past this other level right here, instead it broke down again to this position. Now the moment the market broke past this position again, I knew I had to look for a sell setup, because this position over here, this lower low over here, was broken again. The moment I saw this market broke past this lower low again, I entered a sell position over there, and that was how we got a sell over here. So market went here and gave us a sell over there, and it continued down. That was how we got a sell from the market on that day. So you can see just basic market structure. It broke into higher high but could not break past this higher high resistance over here. If it has broken past this position, we should be looking for a buy, but because it reversed back and broke past this one again, I knew it was a sell position that I'm going to take, and that was how we got 100 pips over there. And the moment after that, the market went bullish again and broke past all positions. Now when the market broke past all positions, this position over here became very much relevant, and the market reversed back to this position again. Creating a bearish trend again. Got to this position, and whoever that bought from that position, I know he made profit from the market. So, and that is how it became bullish. So when the market got to this position on Thursday, it's expected that the market should have just broke past this other one, continue higher high, but instead the market got to this position and refused to break past this higher high over here. Instead, the market created an higher low and broke past this other higher low over here. Now the moment the market broke past this position and over here, remember this was exactly 8 o'clock in the morning when I saw it. The moment I saw this, I entered a sell position, and the market quickly went up again, and that was how we entered a sell over there, and boom. Now after that, you can see that after that mini sell 100 pips over there, the market immediately went up again and broke past that level. Now when the market was there exactly 1 o'clock, there's a structure over here. We waited for it to break past this market structure. So that was what the market did. It broke past it. The moment it broke past it, we waited for it over here and entered a buy, and the market reversed back again and gave us a mini buy over there, and that is how we got 100 pips again from the market, and it continued bullish till this position over here and broke past this level, this higher high level. Broke past this higher high level. Okay, let me take that out. It broke past this higher high level over there. So, and that is how it continued till on Friday. On Friday, the structure continued right here. Then it created a mini bullish structure over here. It created that, it broke another lower. It broke the lower low structure, and continued down to this place. Now, what we saw here is market breaking this lower low structure, and that was what I was waiting for, to enter for a sell position. But unfortunately, the market, there's no more push in the market. Buyers are not entering the market, so the market just went straight up here and is just dancing around this area. So what are we expecting from the market on Monday? Now, this is what I'm expecting. I'm expecting that the market should, okay, let me take this out. I'm expecting that the market should get to this position and give us our 100 pips again. Now, if it gives us our 100 pips again, two things are likely to happen. After giving us the 100 pips, markets might break this structure up. Remember, it might break past this structure. We also have another structure here. It might break past that structure and reverse back again. Now, if it reverses back again, we should be expecting a sell on Monday again. Should be expecting market to get to this point and give us a sell over here. Market should give us a sell trade over there. So if the market should give us a sell trade over there, then boom, this is what we enter. But if the market did not give us a sell trade, the market might just continue and break this structure over here. Then we should be expecting a buy coming back over here to give us a buy trade over here. And if the market should give us a buy trade, then we'll go for it. 100 pips on a buy trade, and that's it. The market structure analysis for you. So it's as simple as that, using candlestick psychology and Trendline to identify valid market structure that can enable you enter your buy and sell position at a very, very comfortable and trusted positions in the market that could make you something from the market. Mind you, not every time you get a perfect winning trades like this. There are times that the market can just dip down and it can give you a loss. But if you are consistent and stick with a powerful strategy that you trust, consistency is what will give you a profitability ratio in a long run. So that is why I like sticking with my 3 steps setup. They are very easy. If you've not watched my last video, I shared the video last week. You can watch it as well. So this is the strategy, and this is what we should be expecting from the market next week. So if this video have been educative and very lovely to you, please subscribe to our channel, like these videos to enable more newcomers, new beginners like us, to enable beginner trader like us see this video and learn from it. I believe these are basic, simple forex strategy that we can apply in our day-to-day trading to make something for the market. See you in my next video.